So we are good to go. All right, guys.
Welcome, everyone. We've got the our stock weekly update here, January 28th, 2019. Hope everyone's doing well. It's going to be a big week in the market. It's a bit of a quieter Monday, but we've got a ton of macro data and a ton of earnings reports coming down the pipe this week. So it's going to be an exciting week in the markets. Last week, just to recap, the S&P was up about 1%, the NASDAQ the same, Europe and Asia were up marginally. So, we're still up about 6 to 7% on the S&P and the NASDAQ year to date. So pretty good start to the year. And but we also saw that kind of a start to the year last year, and we gave up all the gains at the end of the year. So it's an interesting time in the market. We'll see how things pan out, especially with earnings reports coming down the pipe this week. Last week, we had a few earnings reports. We were going to just mention a couple of these and review these. We talked a bit about a few of these in the channel, but for those who weren't paying attention, Intel was one of the bigger ones. Intel is often seen as a bellwether in the semiconductor and tech sector. Their report was a bit weak. The stock sold off, I think, about 5 or 6% last week on their report. Let's pull up a chart here. Nope. That didn't. Okay. Let's try this again. So Intel, as you guys can see, we had a bit of a downward move there. And, the report wasn't terrible, but essentially what happened was they were guiding to flat revenue growth and flat earnings growth for 2019. And the market didn't like that, right? The market doesn't like when companies aren't growing. So the shares got punched down a little bit, and the shares traded about 10 times forward earnings, which is really cheap. I mean, historically, Intel has traded in that kind of market average, right around the mid-teens to high teens. So Intel trading at 10 times earnings is a little bit unusual. But again, that's really reflecting a lot of the pessimism around the semiconductor sector right now, which is seeing some pretty ugly reports, which we'll get into a little bit more here in a minute. But yeah, so Intel reported fairly lackluster, and the market sent its shares down a bit. Not an expensive stock, but one that we'll be continuing to watch. If things improve for 2019, if the Chinese economy starts to pull itself out of the rut, that stock could have some upside. But for now, it's probably dead money in the near term. One other one that we saw in the sector was Western Digital. We're going to talk about this one a little bit more in depth today. We had mentioned it last week. It was a stock that had sold off a lot. When we look at the 6 month or the 1 year chart here, you can see, this stock is down. At one point it was a more than $100 stock. So, you can, let's pull up a 1 year chart here. You can see that the stock really has just gotten crushed. It was down over 60% at one point. So they reported earnings last week. I thought the earnings report was real ugly. I mean, let me just show you here at a trend. These are their earnings estimates here. And Seeking Alpha has done a good job of aggregating a lot of the trends in their earnings estimates. So you can see that the number of down revisions well outweighs the number of analysts up revisions for their earnings. You can see that really the estimates for Western Digital's earnings over the next year plummeted from around the middle of last year. We saw just the market essentially take a dim view of where Western Digital's earnings were heading. And, the market was right. In this most recent report, not only did they miss expectations, but guiding for the next quarter ahead, Q1 2019, Western Digital was forecasting, I think, somewhere between 50 and 60 cents per share in earnings for the quarter. And they were earning in prior quarters, they were earning as high as $1.50 a share. So, we're talking about potentially $6 plus of annual earnings per share, and now you're looking at potentially an annual run rate of $2 per share. So a massive collapse in Western Digital's earnings, at least in the near term. Now, what's interesting is, unlike Intel, when you look at the stock price last week, the reaction was actually positive. Like if you look at the 5-day chart, it had a massive spike. Initially after hours, we saw it trade down in the first few minutes after the report, and then all of a sudden it started reversing itself. And by the morning, the next morning, Friday, the stock was at one point I think it was up double-digit percentage, and it sold off a little bit over the last few hours of that day. But it was really interesting to watch how that traded, because the stock was so beaten up that even though the news was not good in the earnings report, the stock rallied anyway. And so, we often see stuff like this that is a little bit baffling. And I like to tell people, this is perfect proof of how the stock market is forward looking. So investors in this case really were just looking for any indication that Western Digital wasn't going to be unprofitable during this downturn. And when they saw, well, it looks like even with this earnings outlook looking pretty poor, they're still making money. The stock has been so hard hit that, enough people found that it was a good time to buy it, and there was enough certainty for them to buy it that it pushed the stock up. So, even when the earnings results are not positive, sometimes you can get a positive reaction in a stock and vice versa. So this was a good lesson. I actually do think there's some other stuff happening here with WDC, Western Digital. But let's talk about that a little bit later. I think that potentially Western Digital is a takeover candidate, and the market may be looking at that as a potential catalyst as well for the shares. So I'll talk a little bit more in a little bit about why I think that is. But it was interesting to see that Intel versus Western Digital and the two separate reactions to poor earnings. So this morning, Monday morning, we also got a couple of negative reactions in earnings, and which sent some shares down. So Caterpillar reported this morning, the maker of heavy industrial mining and farming equipment. Caterpillar, you guys have probably seen their ubiquitous yellow construction equipment or mining equipment. They're a large global producer of industrial goods, and so they are often looked at as a bellwether for how the global economy is doing. You can see here the market didn't react well to the earnings report this morning, and it was interesting to see. Here's the earnings report when you look at the release from their earnings. From the investor relations website. And this is their official release from this morning. You can see that. Sales and revenue grew nicely in the quarter year over year, grew for the full year, but the profit expectations that the analysts who cover this stock had given were too high. So while sales growth is still happening at Caterpillar, the analysts' belief in higher margins didn't really come to bear. So, Caterpillar is getting a little bit punished today because of the fact that margins and profits weren't nearly as high as analysts had expected. Now, for the full year of 2019, Caterpillar is still expecting earnings growth. So they actually forecasted in here 2019 profit per share expected to increase. And it's a pretty wide range, $11.75 a share to $12.75 a share. So you've got a stock trading at about 124, 125, I believe, as of the close. So again, just above 10 times 2019 earnings. Caterpillar, that's a pretty low multiple for Caterpillar historically. It's traded at that level in times of economic stress, and you could make the case that with the global economy weakening some, that it's warranted here. But it's interesting to note the Caterpillar is trading at a fairly historically low multiple as well of earnings, and they still expect to grow earnings this year. So that was an interesting reaction to see. In terms of their sales, the sales really, with the missed expectations, was mostly a profits issue. With revenue came mostly in line with expectations. So that was interesting to see with CAT. Now, NVIDIA had a really awful morning. They came out and essentially they were not expected to report earnings yet. They came out with a pre-announcement today. And the stock was down at 15% at one point. It rallied a little bit here intraday, but the stock was down, I believe, over 10% today. Mm-hmm. And they came out. Here's the release. They came out and said, while they had recently expected their Q4 revenue numbers to be 2.7 billion for the quarter, they now expect their fourth quarter revenues to actually be closer to 2.2 billion. So that is 20% of what they expected lopped off their fourth quarter revenue. So that, unlike Caterpillar, is really, really ugly. Not only from a profits perspective, but even a revenue perspective. They missed their revenue expectation by 20%. I mean, that's huge. And, they called out some weakness in the data center sectors as well as gaming. Crypto's obviously been weak for them for a couple quarters. So it's interesting to see some of their other segments turning down as well. Data center in particular is supposed to be a growing bright spot for them for years to come. Now, I think part of this may be, data center companies were really building out a lot of infrastructure last year. So they may be starting to pause some of their incremental investing activities. So that obviously hurts NVIDIA, even though they have some new product lines they're pushing this year. The near-term outlook for NVIDIA looks pretty bad. So, we're going to be watching that. It's a stock that I think probably gets a lot more interesting towards the low 100s level. And Nikki, I don't know if you have any comments as to what you're seeing technically with NVIDIA, but
it's at a support level on the daily chart right now. It bounced off of it.
Yeah, it's pulled back
today.
About 61%. Trav, if you look at a daily,
yep,
and kind of zoom out.
For how long? What do you want?
Just kind of zoom out.
Okay.
Kind of squeeze. Yeah, so that's basically a 61% pullback, Fib pullback. But yeah, I mean, whenever you have whenever you're at support, but you have just a company that's just getting beat up like that, it's like, I don't know.
What's the PE on it now? In the 20s?
That's a good
20s?
question. Yeah, it was trading, I think high teens, low 20s, but now with the revised numbers, I'll have to go in and see what the earnings expectations. Those earnings estimates are going to come down for NVIDIA in the next couple days. Yeah. So, even with the decline today, it's probably not trading at a cheaper PE multiple. So
Finviz is showing low 20s, but I'm not sure.
Yeah, and that low 20s number is going to, again, it may even rise a little bit here with the cut in expected earnings for 2019.
Mm-hmm.
So I would expect it to be, I expect there to be potentially more downside here over the next quarter. If it re-rates to like 15 times 2019 expected earnings, and again, those expected earnings are going to be lower than it's showing right now, we could see that stock come into the low hundreds or even potentially come under that triple digit range. So
120 is a major support level for this stock.
Yep.
Like goes back to like 2017. So
yep.
That would probably be the area I'd be watching if price doesn't hold up from here.
Yeah.
Yeah, and that kind of correlates with where Bitcoin's price really took off too.
Yep.
But if you look, I mean, just for context, like just back in 2016, I mean, it was at like 25 or 30 bucks.
Yeah, but let's pull up some just quick financials here. The fundamentals for the first time have really deteriorated at NVIDIA. Now, the question is, at what point does it price in and bottom? Mm-hmm. But you can see that like their revenue growth has been massive over the last several years. This is actually trailing 12 month. But I wanted to show you that they were as recent as like their last couple quarters, they were growing revenue at 30-40% year over year. So here's a quarterly. You can see it had decelerated down from 40% down to 20%. But now that you've got revenue declining year over year, the fundamentals have changed, at least in the near term.
Yeah,
so
that's significant.
We've got to figure out how to reprice this and figure out what level we think it's a good buy, which is a little tricky as the numbers are starting to reverse themselves. So NVIDIA is a tricky one, but we're gonna probably take a deeper look at that in the coming days and weeks. So yeah. So again. A lot happening already this week in earnings with Caterpillar and NVIDIA, but really it gets going on Tuesday, Wednesday, Thursday. We've got companies like Tesla, PayPal, Microsoft, Facebook, Apple, Amazon. So Apple and eBay and AMD report on Wednesday. Thursday is a huge day, especially for tech. You've got Alibaba, Facebook, Microsoft, Tesla, Amazon, Visa, PayPal. That's going to be a real big day. So we're going to know a lot more too about what's happening in the global economy, and it'll be interesting to see where these companies guide for 2019. But potentially a lot of movement in various stocks this week. So we'll be watching that. And then macro data, there was some pent up macro data that hadn't been released in the US. And along with the normal releases, we're going to get a kind of a deluge of macroeconomic data this week. We've got a Fed decision in the US on Wednesday. So that'll be a big thing in the markets as well that people will be paying attention to. I believe the expectation is for the Fed to leave rates unchanged. So if there's anything there signaling the Fed wanting or continuing to raise rates, that would put a huge damper on the market. But the belief is that they're going to leave rates unchanged. We get pending home sales, a bunch of employment-related data, mortgage applications, the usual jobless claim numbers on Thursday, non-farm payrolls, unemployment rate, the ISM PMI on Friday, vehicle sales reports on Friday, and consumer confidence on Friday. And then next Monday, retail sales, housing starts, building permits, construction spend. I mean, there's just a ton of data coming out this week. So there's going to be a lot to digest. And and actually on the jobless claims last week, we saw the lowest, the U.S. printed a lower than 200,000 initial jobless claim number for the first time since the 1960s.
Oh, wow.
Yeah.
It was like 199.
Yep, this 199 number. It's been trending lower since the financial crisis, obviously. But it was, it continues to do so, even with the government shutdown and everything from the last month. The jobless claim numbers continue to be really strong. So the U.S. consumer and the U.S. jobs picture still looks really good, while we've got some other concerning signs with business investment and confidence and the semi sector in particular.
So
obviously
Trav, I guess the question is how long can it stay down there, or are we like on a brink of like a reversal in that trend?
That is the question, right? Yeah. That's why I think earnings reports will be so intriguing to see this week. The way that companies are guiding for 2019 may give us some clues as to whether or not the jobs picture is going to change. If companies come out and say, we've got to cut costs, which I've seen a couple companies already mention some cost cutting measures, but so far it hasn't been anything drastic. So this week we'll get more info on how companies are thinking about jobs, and if there's any major emphasis on cost cuts, that would be concerning and probably be a forward-looking indicator that the job pictures may be changing. So we had a couple credit card companies report last week too. Capital One probably being the biggest one, and their data looked fine. It didn't look like the consumer credit default numbers were rising.
Not much.
They're really
slight.
Yeah, it was very slight. Their charge-offs remained in line with what they expected. So as far as consumer credit today, looks okay. At least in the developed economies. China is kind of a black box, so we don't know what's happening there, but as much. Those are the main things from last week and what we're watching for the main part of this week. Again, just really earnings focus, and then we'll be digesting a lot of the macro data coming out as well. So, and a couple of our companies that we're watching are reporting this week. Eagle Materials, which is on the watch list, they report on Tuesday, so tomorrow. So I'll be watching to see what how that report looks for Eagle. It's rallied a little bit, but it's still still somewhat close to where it bottomed out in that late December timeframe. And I'd like to see it come back in a little bit more before I get aggressive, but it's one that I'll be watching. It's just a really well-managed company, and they're sort of levered towards U.S. construction, so it'll be interesting to see how they're performing. And then Pulte Homes, which isn't officially on our watch list, but it's one that Nikki and I have been watching in the housing sector. is also reporting on Tuesday, I believe. So that'll be interesting to see how they're performing and how they're thinking about 2019 going forward with sort of mixed signals in the housing market. And then, yeah, I believe those are the two main ones that we're watching. But again, I think so. As far as the watch list goes, last week we had a downgrade on one of our watch list stocks, Weibo. Weibo is, I guess, more or less you can think of it like the Twitter of China. And we've talked a bit about it in the channel, and you've seen it in the watch list. But there was an analyst, actually two analysts that came out last week, and let's see, is my chart, is this right? Yeah, so actually I need to go back a couple days.
Is that a 5 minute?
Yeah.
5 minutes.
So this was last week. We saw Weibo down 12 or 13% on the day it got an analyst downgrade. And then it's rallied right back. So, or almost all the way back. So we were hoping that this would come into the 40s, and I'm looking at sort of a low 40s level of buying Weibo, but it just sort of marched right back up towards 60. We can talk about the downgrades a little bit. I couldn't actually get detailed access to the Nomura report, which I was hoping to figure out why they had downgraded Weibo. There was only brief comments online that I could find. So unfortunately, I wasn't able to get my hands on the report. But they downgraded their target price from $74 to $61. And then Jefferies came out the next day and did the same thing. They dropped their target from 83 to 58. Again, it's like, okay, guys, great. Great downgrade. You had an $83 target as it went lower for 6 months, and now you downgrade it. It's like, so I don't think the analysts are all that smart about where the stock price is going. But, again, I'm still hoping Weibo would come in a little bit more so we can have a bite at it at a really cheap, like low teens forward price to earnings multiple while it's still growing 25 to 35% a year. Maybe I'm trying to be too cute and aggressive by waiting for it to come to that level. But with these Chinese stocks, you just never know because they are, high, what we would call high beta stocks. They're going to usually move 2 to 3x whatever the market moves. So, if the market moves a little lower, these Chinese stocks get really hammered. And so that's why I tend to be a little bit extra cautious with them, and I want to buy them at really, really steep discounts.
Even JD is still declining.
Yeah, I did notice JD has perked up a little bit in the last couple days.
It's spacing out, it looks like, but it just kept getting hammered and hammered and hammered. It was like,
Yep. We talked a little bit about JD, I think, before, and their CEO was cleared of the rape allegations in the U.S., or at least he wasn't charged, and so that was an overhang on the stock that got removed, but it didn't rally a whole lot. Although the past few days it has seen a little bit of action. We've got a couple of pops here, but
all of the China stocks kind of intrigue me right now.
Yeah.
For potential opportunity, but I'm like you said, it's kind of being patient and waiting it out because we don't really know.
Yeah.
Next.
Most of these Chinese stocks are really beat up, but similar to like WDC, it's like, okay, at what point is it all priced in and do we start to look forward? Because the macro data coming out of China has been pretty ugly, and with the trade war still at least somewhat in effect, it's weighing on sentiment about Chinese companies. But at some point, you've got JD trading at a fraction of the multiple that Amazon trades at. Now, JD is no Amazon, but it is one of the largest online retailers in China, and has historically grown at double-digit rates for many years. So it trades for about 0.5 price to sales, which usually even Amazon, before it got into some of its faster growing businesses like Amazon Web Services in the cloud server business, it traded at about 1.5 times sales usually. So JD trades at a pretty big discount to what a lot of successful online retailers trade at in terms of price to sales. So that is one that really is kind of baffling because it isn't a huge long term. It's in a massive economy. As one of the leaders in e-commerce, you would expect that to continue to grow for the next 5, 10, 15 years, and it trades at a valuation multiple discount. So potentially the upside there could be pretty huge.
Maybe Baba's earnings could maybe lift some stuff.
Yep.
If it does well,
Yep.
obviously.
Yep. So we're Weibo, continue to watch. It popped more than I had hoped it would. I was hoping it would go the other direction, but we'll keep an eye on it. And then Nikki, we were talking about Stitch Fix this week. I believe I'm going to add that to the watch list soon. Yeah, this one's tough because
It's a toughie.
It is a toughie. This stock has been all over the place in the last year. This stock IPO'd in I believe the mid to high teens. First couple months it traded, it just chopped around, and then it went parabolic. Middle of 2018, I believe, early to mid 2018. It was a $50 stock, at one point.
Topped out, yeah.
And and then it came down by 50% or over 50% at one point. So
It's all the way back down to the lows now.
Yeah. So it's been sort of erratic, and the fundamental story has been a little bit tricky to figure out. This company, they do clothing box subscriptions, and I've heard the bull arguments and I've heard the bear arguments, and the bear arguments are like, hey, this is the next like Blue Apron type of situation where it's people don't really want to buy clothes on a subscription basis, and it was just a fad. People got interested in it for a while, and then a bunch more competitors came into the market, and people started to drop this, and they're going to struggle with profitability. Well, the truth is, like, unlike Blue Apron, which has been structurally unprofitable, Stitch Fix is actually profitable, and the story there is that they have a really great CEO. If you've ever heard Katrina Lakey on a podcast like How I Built This or other places where she talks, she's just really, really sharp. And
margins on clothes are also higher than food.
Yep.
So
and that's
that
huge.
Definitely makes a big difference in the business model.
Yep. And they've really barely started to scratch the surface on international markets. They've launched their men's lines, and then what I think is even more interesting is the kids lines, which we talked about in the channel recently. So kids, obviously, even more so than adults, have to keep buying clothes for them because they grow out of their clothes, right? So the potential for subscription in kids clothing to me seems really strong.
Is anybody else doing a kids subscription?
There's some smaller competitors out there.
Okay.
But no one that's huge yet. So
what I was thinking on the kids side, just to quickly interject, is it can be exciting for the kids to it's kind of like a present every month. They get a new box and it can be an experience.
Yep.
So that I can see catching on.
Yep. When I was looking online this week, I was digging around Twitter and other places for sentiment and feedback on how the kids line was doing. And generally, most of the comments I saw were positive. There's some bloggers that have written about it. Now, a lot of those bloggers are probably incentivized by Stitch Fix to write about it positively, but it was interesting to see there really wasn't very many negative comments about the Stitch Fix kids business. If anything, there's just sort of a shortage of comments out there. I don't think the business is very meaningful or big yet, but early signs look like could be successful.
They just launched it recently, right?
Yeah,
the kids side?
late last year, I think,
okay,
right?
then
Or
yeah,
mid
that's
last year.
pretty new.
Yeah, so, and their Stitch Fix is also heavy into algorithms and data and using that to improve the selections and things like that. So a larger online retailer who thinks that, or even a larger traditional retailer like a Walmart or Target, I could see Stitch Fix potentially being an acquisition candidate to not only acquire this different business model, but acquire these data capabilities. Yeah. So yeah, it's one that I'm watching. It's not super cheap in terms of price to sales or price to earnings, but because they're expected to grow over 20% in the near term, it's also not wildly overvalued. Now, the one thing that would be a concern is if their metrics start to reverse in the next couple quarters, like if we see churn rise and their ability to add new customers go down, then it calls into question the valuation of the company. And so I think that's really the risk here is if you have a situation like Blue Apron where they start losing customers instead of net adding customers.
Were you able to see what their retention was? their customer retention?
That's a good question. I don't think
I
they've
don't think I found
called
it.
out churn specifically. Yeah.
Mhm.
They report net additions. Let's look up their investor presentation and see if they've got. I love to look at, by the way, this is pretty typical of like when I'm, taking a quick glance at a company, especially initially, what I like to do is see if they have an investor presentation that's recent, and Stitch Fix does. And so it's really nice. It's a good way to kind of quickly understand what their management team is focused on and how they're presenting the business. It certainly won't give you exhaustive due diligence, but it's a good way to sort of get the lay of the land. So yeah, Stitch Fix has a really nice, they talk about things like their potential addressable market and, their products and things like that. And so that's all fine and good. I was hoping that maybe they would address churn in here, but
I looked at it last week and I didn't catch anything on that, but maybe I missed it.
Yeah, so they'll report active clients, so you can see like net additions.
Mhm.
It's always nice though when a company provides a lot of the metrics that go into the active client number. So as you know, active clients, the number will depend on how many were added, how many customers they lost.
Mhm.
And so when they can provide more granular insight into the change in active clients, it's always nice. But, good gross margins here. The trajectory's been good. The growth of overhead has been somewhat muted. Their advertising expenses are rising, which is something to keep an eye on. Like if they're having to spend more to acquire more customers, that would indicate some deterioration.
Like Blue Apron.
Yep, exactly. So, their EBITDA numbers, their earnings numbers actually have come in a bit in the last couple quarters. And I believe their comments on that are they're investing for growth. So they're, they've been adding headcount to staff up for some of these newer business lines that they're launching. And so that's something to watch as well. But in any case, this is an interesting one that we're going to watch. So Nikki, I don't know if you have any further thoughts on it.
Well, I love a good short squeeze, and it's got a high short interest. That's the first thing that I saw. And also technically on the chart, it's looking like it's bottoming out, and I don't know, could be something short-term to watch for me for momentum.
Yep.
Potentially.
Yep.
But I when do they come out with earnings? March 11th?
That's a good question.
It's like March 11th.
Yeah, let's see. It looks like, yeah.
I probably want to give it that till see how that goes, right?
Yeah. Their last report was December 10th. So it'll be early March when their next report comes out. So yeah. So that's one we're watching, and we need to do some more work on. Other than that, I wanted to, Western Digital is another one I believe I'm going to add to the watch list. So we talked about this a little bit earlier, but again, I was pretty surprised at how this reacted, even though I know the stock's been beaten up. There was really nothing positive to hang your hat on in the most recent quarterly report or in their guidance. But I guess maybe it was less bad than some had expected. But there's also an interesting dynamic in play with Western Digital. So let me just give you a little bit of background. A few years ago, Western Digital traditionally was a maker of hard disk drives. So, old school hard drives that would go in your servers or laptops or desktop computers. Now, solid state drives, as we've talked about, have been taking share from hard disk drives for a variety of reasons. They're really just a better product. But in any case, there's the total demand for storage has been rising so much that the hard drive business has managed to be relatively resilient over the last couple of years. But Western Digital a couple of years ago also saw that they were going to have to diversify out of hard drives, standard hard drives long term, because eventually that business would start declining, and what we call like a melting ice cube, like it would slowly start to lose revenue over time. So they bought a company, SanDisk, that was focused on NAND flash memory. So this, NAND goes into solid state drives and other similar products. And Western Digital made a big acquisition of a formerly public company called SanDisk, and that got them into the NAND business. And the NAND business for them has been pretty good. As you can see, like if we go back to like their earnings history, I don't know if actually I can see it far enough back here, but in any case, Western Digital's earnings, were growing pretty nicely, and that's why you saw this stock, over a multi-year time frame, do pretty well. It's sort of been choppy, but in any case, the NAND business in the last year has turned down. So not only is the traditional hard drive business for them shrinking, but the NAND business has hit a snag with a lot of what's happening in the semiconductor sector, as we've seen from companies like NVIDIA and Intel. They are hitting a bit of a demand crunch. And so the demand for NAND has been going down, while at the same time, a lot of the NAND competitors had been expanding supply. So you've got a pretty ugly situation in NAND, and that's one of the things that has really caused this stock price of Western Digital to collapse in the last year. But the NAND business is interesting because I'm going to pull up a chart here of the market share by the major NAND flash manufacturers. So, there's players that own big shares like Samsung, Toshiba Memory, Western Digital. Believe in this last quarter, they were in third place as far as the market share of NAND. And you've got Micron, which we've previously talked about, is a player in NAND as well. But you've got a South Korean company that's large, SK Hynix, and even Intel has some NAND business. So you've got a really credible 6 or 7 players in this NAND business. But there's some interesting dynamics happening. So Toshiba Memory, the traditional Toshiba company that you probably remember seeing around making all sorts of different electronics, out of Japan, they actually sold half of Toshiba Memory to a private equity consortium, including Bain Capital, Apple, and a couple of other companies. And so the reason they had to do that is because Toshiba, the parent company, owned some nuclear facility businesses, and those businesses were exposed to a bunch of liabilities. And there was a concern that Toshiba, the parent company, was going to be delisted and have a problem with capital. So Toshiba decided to raise some cash by selling off a big chunk, a majority stake of its essentially marquee business that was generating most of its profits, that business being Toshiba Memory. So Toshiba Memory is now owned by a private equity consortium. And you've got a couple of other players with like mid-teens market share, including Western Digital, Micron, and SK Hynix. What needs to happen here is consolidation. Some players need to be consolidated. So obviously Samsung is too large of a company for really anyone to buy. Micron's actually, I believe, now got about a $40 to $45 billion market cap, and SK Hynix is pretty similar. I believe their market cap is somewhere around $48 billion US dollars. So Micron, SK Hynix, and Samsung are unlikely to be acquired, not only because they're just very large, but also because the countries where they're domiciled really they see them as strategic assets and they don't want them acquired by someone else. But Toshiba and WDC are small enough that they could be acquired. And Toshiba has already sold half the business to private equity. So I believe what's going to happen here in NAND is that one or both of Toshiba and WDC are either going to merge or be acquired in the next, call it 2 to 3 years. That is my prediction. I don't know if it will come true, but Western Digital is actually the most likely to be acquired if there is an acquisition, because they're the smallest of all these players in terms of market cap. So I believe, let's look up. I believe it's like 12 billion or so as of today in market cap, and a little bit higher than that in enterprise value. Yeah, so you're about just under 13 billion in market cap for Western Digital. Now, Samsung has the cash to buy Western Digital. Micron could probably buy Western Digital if they add a little bit more debt. And SK Hynix, same deal. They could probably acquire Western Digital. They would have to aggressively add some debt to the balance sheet, but they could do it. Toshiba, because they're private equity owned, probably can't acquire Western Digital, although they could maybe merge with Western Digital. So that's a potential transaction I could see. Intel also has the capital to potentially acquire either Western Digital or Toshiba Memory if private equity wants to sell their stake. So Intel is the smallest of the players right now, but if they want to get further into this business and help consolidate this business, they're a potential acquirer with enough cash to do that as well. So, so the way that I'm looking at this, and by the way, DRAM, which is a market that's somewhat analogous to the NAND market, where they had a few years ago, they had like 4 or 5 major players. And oftentimes during the cyclical times in that industry, the profits of that industry would go away because of competition. Well, the DRAM business consolidated over the last couple of years. That's one of the reasons why I love Micron so much, because Micron acquired one of the remaining big players, and they acquired Elpida, which used to have like 15% share of the market. So Micron went from like a low double-digit percentage of the market to, basically being over 20% market share. And furtermore, what it really did was it took the DRAM industry from like 4 or 5 legitimate players down to 3 players. So Samsung, SK Hynix, and Micron essentially control all the volume and pricing in the DRAM market. And that's why the DRAM market has been so good for Micron in the last few years, is because it's an oligopoly now.
And I feel like prices have actually been going up. Like people have been complaining about that on Reddit and stuff, right?
Yep. So the DRAM market, the DRAM business became a very good business for the 3 remaining players, Samsung, SK, and Micron, and they could kind of control what happened to volumes and pricing, and they could be really smart about not adding too much capacity at once. But in the NAND market, you've got 5, 6 players, and they can't all coordinate with each other. And so they drive oversupply a lot more frequently than in the DRAM market. But what I believe will happen in the NAND market over time is that eventually it'll get down to 3 or 4 players. And so I know I've been rambling, but long story short, that's why I think Western Digital is a potential acquisition target, because the NAND market needs to consolidate, and they're really the smallest player. And, they're really the ones that are probably most likely to get acquired by someone else. Now, again, I do think Toshiba Memory could also be acquired, but partially because they're private equity owned, and eventually their private equity owners are going to want to sell that business. But the private equity owners have actually said that they want to IPO Toshiba Memory. So that's why I think it may even be more likely that Western Digital is the true acquisition candidate in the NAND market. So I know that was long-winded. Hopefully that made some sense. I'm not saying Western Digital is going to get acquired in the next 2 months, but I do think it is a high probability that Western Digital could get acquired or merged in the next couple of years.
So what are the, I guess, like the actionable takeaways from that? Like, does that make WDC more of an attractive buy with a potential target based on buyout numbers, something like that? Or?
Yeah. And, I've haven't really put pen to paper as far as coming up what I think that buyout number would be. But, usually when in an acquisition, you're going to get an acquisition premium of somewhere between 30 and 50%. Mm-hmm. Now, Western Digital's management is probably not wanting to get acquired with its stock price near its 52-week lows. So what will probably have to happen is there'll have to be some recovery in Western Digital's stock price, and then on top of that, you'll get another 30 or 40% in an acquisition scenario. So like if this gets back to like $50, $60 a share, and then you add a 30% premium on top of that, you could be looking at a $75 to $80 acquisition price. So from today's price, that's almost a double. Mm-hmm. And that may be part of why this stock bounced is that people, not only were the results maybe a little bit less bad than feared, but people were just like, all right, it's time to buy this thing. And they start jumping over one another to buy it. So people are chasing it. I mean, technically there could be also a buyer buying up a chunk of the stock now. That's not super likely, but it is a possibility that some of that buying is now that they've reported their earnings, there's no more non-public information to be put out, and a potential buyer could be buying that stock. Mm. So anyway, just something to watch. But that's one of the big reasons why I'm going to put it on the watch list, is because I think they will be a buyout candidate.
Nice.
So that's Western Digital, and that's really it for what I had to talk about today. Nick, what are you looking at? What are you trading?
First of all, I just want to say that was a great explanation of what's going on with that.
Okay.
I feel like you should be a lawyer, like your case was like. No. I'm just mainly interested right now in a day trade for tomorrow in NBEV. So for the traders, NBEV is setting up on the daily chart for a breakout through a pretty key area around 690. It broke out today, but I think tomorrow is really where the opportunity can come. So I'm watching that for a day trade. That was really it. Overstock had a little pop over the past few days, but
Yeah.
I'm just
You've
kind
been
of
watching that one.
I'm just kind of watching that one to see if this short squeeze is really going to happen. Tomorrow, OSTK is another good one to watch for trade, actually, because it's been holding up surprisingly after T0 launched, and the price popped and it's been holding up. Today it held up pretty well. So tomorrow, if it continues to hold, we could see a blast through that 20 price level. So OSTK and NBEV, I know I'm always talking about those two for trading purposes, but it's because they've got the momentum. So that's what I follow.
Hey, Trav, can you open that link I just posted in there?
Yeah.
That's a overstock chart. Just kind of showing the accumulation range. So, 10 to 15. I know we were talking about this a couple weeks ago, I think, and, talking about a potential pop off of that area. It's up percentage-wise from the lows down there over the past 3 weeks. It's
Up
actually
about 35%, right?
Well, it's up 60% from the lows of December.
Yes.
It hit a low of
It's like 13,
1230. Yeah,
that's right.
12 something, and then recently hit a high here just under 20. So, and that's the thing. I mean, when you have a stock with this high of beta, it's like, do you day trade it? Do you hold it longer term? I mean, I see the, potential accumulation type strategy with the idea of like you're placing your chips on T0. Yep. Which, by the way, I signed up for.
Yeah, let's talk about that.
Yeah, we've been watching. I mean, it's just I should actually take some screenshots. I'm probably going to do a video just on all these STO platforms to kind of show the state that they're in, which is kind of like a desert. It's like really, really low liquidity and trading volume right now, which is to be expected. I mean, it's kind of like a historic moment to me, just because all this stuff is like just now starting to trade. And I know I've said this over the past couple of weeks, but I'm just going to really focus in over the next 1 to 2 quarters and just kind of check in on these exchanges every day and just see what the developments are, the changes, see if there's big liquidity or if it stays dry. And I think that's really what could drive Overstock.
Yep.
I wanted to take a swing on Overstock on Friday, but I wasn't sure if it was going to stick, if the momentum and the hype was going to stick. Yeah. I kind of had a feeling it was going to fizzle out after Friday. So I wasn't too aggressive with that idea. Mm-hmm. But now I'm seeing the price action after Friday and today, and I'm thinking, over 50% short interest. If it holds, we could see a run up to 30 in a couple of days. Mm-hmm. If it really wanted to. So, yeah, I'm keeping an eye on it.
Cool.
Yeah, it's interesting.
Nick, you also had an alert in Discord last week, I believe, for Apple.
I bought Apple. I think the worst is priced in here because they came out with their earnings warning, their sales warning. Mm-hmm. Did you look at that, Travis?
Yeah.
The sales warning. Did you see anything alarming?
No. The thing that is a little bit alarming is that they get about 20% of their revenues from China. And so not only is there a demand some demand weakness in China, which I would be a little bit less concerned about for longer term.
Mhm.
But there's some IP issues in China, and they were ordered to actually stop selling a couple models of their iPhone.
Yeah, I saw that.
And that to me is like the bigger concern is like if they get caught up in the trade war, China's a pretty big market for them, and it's certainly a growth market for them. So
Was that blowback from Huawei or
yeah, Huawei. Yeah. Yeah. So they're kind of in the middle of that whole thing, but
the valuation was getting a bit too low to ignore. It felt like an 11 PE, 12 PE on Apple, which was trading at insane valuations, and a lot of, when you compare it to Google and all the other FANG stocks, it was just too low to ignore. So I started a position on it. And if it does go lower after earnings, depending on what said, I was looking to accumulate more if it got lower.
Yep. We get Apple reporting on Wednesday.
Tomorrow? It says tomorrow.
It may be tomorrow. Is it Tuesday after the close?
Tomorrow after the close.
Okay. Yeah.
And Apple actually, looking at the chart, Trava just posted another link in there.
Yep.
It has this tendency to pull back about 45, anywhere from 35 to 45%. And then, it was off of the highs by almost 40% recently. So
this is a long-term hold for me. And another thing that I thought was absolutely interesting was, I know this is a little bit far out, but since this is a long-term hold for me, it works. The 5G phones are going to be an opportunity. People are going to want to upgrade their cell phones to get the new technology. So I see that as a sales opportunity for them when they finally do launch their 5G phones. Everyone's going to want to everyone's going to want to have the fastest connection and be able to take advantage of that. So I see that as an opportunity.
Yep. Yeah. So one thing that's intriguing about Apple to me is, well, there's a couple things, but one thing that's intriguing to me is that I do believe that there's some product lines that we don't know about yet that they're working on. And so that's one thing that I think tends to be underestimated about Apple is, yes,
innovation.
Innovation. People say that, oh yeah, Apple isn't innovating the way that they did under Steve Jobs. That may or may not be true, but they've had some pretty big winners in the last couple of years. People overlook things like AirPods, which and the Apple Watch, which are now both shipping like over 50 million units each a year.
Wow.
The growth on wearables for them is, I think it was like in the 50%.
Yeah.
Year over year. I think I have to double check that. But I remember when I was looking at it, I was like, wow, like the Apple Watch and AirPods are killing it.
Yeah, absolutely.
I was listening to a podcast about that too, about how Apple would not hesitate to kill the iPhone if they could. Like because they're constantly innovating, right? They went from like selling big desktops to little, light laptops to now everybody's on their phone. But as soon as they get the next evolution of that,
Well, the iWatch watch wearables that's still a growing market, and it's still expected to expand. So I see potential there. Anyways, that's what I was thinking.
Yeah, and I think it's interesting. I do think there is potential for Apple to re-rate to the downside again.
Mm-hmm.
I mean, at one point a couple years ago, Apple was trading at a single-digit PE multiple. It was trading, I believe, at like between 6 and 7 times at its low. I may not even have gone back far enough on this chart, but at one point, people were worried about iPhone demand. Like I think like 5-6 years ago.
I remember that.
And it traded down to like a 7x multiple on forward earnings. So, will it ever trade there again? I don't know, but it is possible that you could see some derating in the multiple, down to 8-9 times earnings, especially if their forward guidance is a little bit weak. And people believe they're losing their touch, right? But I still like Apple. They've got one of the largest cash hoards in corporate history worldwide, right? So
that was another thing.
Yeah.
Continue, but I had a point there too.
No, yeah. I mean, they've got enough cash to be able to go into any business line that they want. They've got enough cash to buy just about any other business that they want. So, there's a lot of optionality in Apple that isn't really being talked about, whether it's new product lines or something interesting they could do with their cash balance. So, yeah.
I guess they're going, I was reading about how they're going cash neutral and how that would incentivize them to buy back shares.
Mm-hmm.
And so if they do end up doing something like that with their cash, then that could be an interesting proposition for shareholders, adding more value.
Yep.
So that was another thing that I was reading up on. Wearables grew by almost 50% year over year.
Yep.
For Apple last year.
Yep.
As Apple Watch and AirPods were wildly popular.
Yep. So, yeah, pretty underrated in terms of their success on recent product lines, right? Like not getting a lot of credit for
That's
that.
what I was feeling. I feel like the market, I feel like this was a needed correction in Apple.
Yes, definitely.
Absolutely.
Definitely.
Without a doubt. And I think, like you said, if we do see a decline in the multiple, I still see value there over the long term. So I would consider adding to my position, which is what I said in my alert. So,
and I think Warren Buffett's cost basis is somewhere in like the 120s. It'd be interesting to see it get back to that level, or even a little bit lower. And you're like, if you could get it for cheaper than where Buffett bought it,
I feel like that'd be a deal.
Yeah.
In the 120s would be a deal
for sure. So awesome. Well, should we address a few questions if there are any out there? Do a little Q&A here to finish it up.
Yeah, Bo asked, Nick, what percentage of your portfolio are you in Apple?
Oh, good question. It's a starter position, so I'm not fully in my full position. Do some quick math.
While you're looking that up, are there any other positions that you guys are in that you maybe have been in for a while, but might just be worth kind of mentioning and maybe kind of explaining a story, or are there any good lessons behind any open positions?
Yeah, let me peruse the watch list again. I think one of the ones I was looking at this past week was Lear. Lear is a company that is just so well managed. This company makes seating and electrical components for automobiles, but they pretty much count every major manufacturer in the industry as one of their customers. And, the automotive sector, there's some weakness there, obviously, but Lear has just consistently grown earnings over the last 6, 7, 8 years. They're returning capital to shareholders by buying back their shares at low prices. They're trading at a single digit price to earnings multiple and growing every year. Like when you have something like that, like this is the kind of thing that you could squirrel away in your, especially once it comes down from, over $200 a share to like 120 or 125, in the Christmas time. This is the kind of thing that you can just put in your 401k, your IRA, and just forget about it for like 5, 6, 7 years. And you come back and you're like, oh, it's up 3x from where I bought it, or 4x from where I bought it. Just one of those companies that you can really count on to just consistently grow revenue, earnings, and just really awesome management team. So this was one that I saw that I think they reported last week and pre-announced last week. And I thought about selling it, and I was like, why would I sell this stock? I was like, not here, at least. If it could get back to a traditional earnings multiple of like somewhere between 12 and call it 15, 16 times, maybe I would sell off some of my position, but it's still trading at like 9 times forward earnings. So it was one where I looked at it and I just said to myself, don't be overactive here. Don't be like the overactive trader. Just like sit on this for a while. And it's the kind of situation where you really have to be patient.
How long have you been in that one?
Not long, because I actually bought it back in December.
Oh,
and I bought it in my like non-taxable account. So I'm just gonna maybe hold that for like years and years.
If you need me to like check in with you every once in a while and slap your hand, like, are you still holding? Are you still holding?
Yep. Yeah, I'm trying to think about how to really let's just bring it up in FinViz to show you, like, or maybe even in Rocket Financial. But there's one of the things that's really great about this is so obviously you see the consistent sales growth But in an environment where automotive hasn't been super great, but what's even more glaring is like how they've reduced shares outstanding. They've actually reduced their share count. I think in the last 6 or 7 years, they've reduced their share count like 45%. So they're buying back at good prices, and that not only in conjunction with the sales and earnings growth, that's why you get EPS going up almost 4x within like 5 years. I mean,
That's
look,
solid.
yeah, they were doing $5-6 in earnings back in 2013,
Wow.
and they're going to do close to, I think, $20 earnings per share this year, or they're expected to do about $20 a share in earnings. So they 4x'd earnings per share, even though sales have only gone up about a third. So if sales have gone up about 30%, and earnings per share have gone up in the same time frame about 400%. So that's just a perfect example of a management team who gets it, execution at its finest, and really caring about shareholders. So
this is an example of a good.
This is a golden
company
child.
fundamentally, right?
Yep. This is what we might even call a compounder, although they're in a little bit more of a cyclical industry than a lot of compounders that we find. But
And it pays a nice little dividend there too.
yeah. So,
Yeah.
And again, it's still not even expensive, right? It trades for like 8 to 9 times forward earnings. I actually don't know if this number is correct. I think it's closer to like somewhere between 8 and 9 times forward earnings. So, I mean, really, you could probably make a case for buying it today. I bought some in December, so I'm a little bit maybe biased, but I was hoping this would come back in to allow us
Pump
to
your
last.
bags.
Yeah, but in any case, that's an example of something I was kind of thinking about this week.
Cool. Trav, do you see the icon in Zoom that is the Q&A?
Yes. Okay.
Yeah. So there's.
Got it. So we got the chat and the Q&A we got to watch here.
Yeah. we can toggle that on or off.
Okay.
Based on your preference, but usually the Q&A is good if we have a lot of questions coming in, so you can like just manage it and it won't get buried.
Yeah. So Mark is asking, why would breaking volume be poured into short-term U.S. corporate bonds recently? Oops.
Record-breaking volume is coming into short-term bonds.
Well, corporate bonds usually aren't short-term, so I don't know if you meant government bonds. I don't know why that's not pasting. I can't seem to. Let me.
Yeah, I can't just select.
Here we go. Okay, so this is the link that Mark sent.
Okay.
VCSH. What is VCSH? That's Mark, do you have a Bloomberg? This is a screenshot from Bloomberg, which is a professional platform for data and trading.
Looks like a Vanguard short-term corporate bonds. Yeah, here you go.
Okay. So this must be, so this is a, I wonder if they are the Vanguard, this Vanguard fund. It's not pulling up for me. Oh, wait, here we go. So this is a Vanguard ETF.
Oh, yeah. If you look on
short-term bonds.
TradingView, it's got a crazy volume.
There must be something funky going on with this. Maybe this ETF just recently opened to new money or something like that. There must be a reason that volume is poured into this ETF.
What day that was? There was one day it was.
I'd have to look into this.
January 16th.
Maybe this thing just launched. It's not clear to me. Well, I may have to follow up on that, but since it's an ETF, yeah, there could be a couple things happening.
Yeah, I don't see anything.
I'm not sure. Yeah, sorry. Don't know offhand why this would have. It looks like it's got at least a 5-year track record. Inception, according to this, was November 19th, 2009. I don't know why volume would have all of a sudden poured into it or been traded in it, but
Yeah, it looks like it was isolated to that one day.
yeah,
It's very strange. Maybe big block buyer or something.
yeah, could be. I wouldn't. Yeah, I don't think that's a signal for anything. General bond market, to be honest.
Yeah. Bevo Time says, can you explain a bit more about the trade on InBev, Nick? The day trade. So just, I guess, what your thoughts
You mean
are.
like the setup? Oh yeah, sure. By the way, to answer the question about Apple, the position, it's around 5% of my account. So I'm looking to maybe bump that up to about 10% if the price goes low enough and it's attractive enough. Obviously Apple's a big company, so I've really been contemplating making it a bigger position. But as far as NBEV goes, basically this is the daily chart that you're looking at, and 690 is an area of resistance, and it's kind of trading close to that resistance level. It did pop through it not long ago, but now we're retesting it. So what I'm basically looking for is to see if this retest of resistance is going to hold and push us through 8. So the day trade for tomorrow would be a push into 8, and I wish I could pull up my chart and show you the Fibonacci extensions and stuff, but basically there's a pretty key Fibonacci level around, I believe, 820 for NBEV. So that's kind of the area that I think price could get pushed into tomorrow if enough volume comes into the stock. Let me just double check that level.
Looks like it's got over 25%
Yeah.
short too.
820. 828 is actually the exact Fibonacci level that I'm thinking price could push through. If it gets there, it could hit 10. 10 is the next major resistance level. I would consider holding it for a swing if price is strong into the close tomorrow. So obviously we'll see what happens, and I'm gonna have to base that as it's happening. I'm really just interested mainly in that 8 level first to see if that's gonna it's gonna tackle that.
One of the things that makes me nervous about the cannabis stocks is that they have pretty big ambitions, and with the share prices booming, I imagine we're going to see some capital raises from a couple of them.
Which is why I don't want to hold any of these long term.
Yeah.
That's exactly why people are saying, oh, why don't you just swing it and hold it, for a couple months or whatever. And I'm like, no, thank you.
On the other side of the equation, short interest in all these names is not only pretty high, but there's just very few shares available to borrow, and the ones that are available are at really high rates.
Mm-hmm.
So shorting it, just dangerous game.
I wouldn't want to be short NBEV right now. That's for sure.
No.
It just keeps holding up. It's just relentless. The shorts must be so frustrated.
Yeah.
Did you guys see Cron?
Yeah. I noticed that one earlier.
It's up 15% today on really big volume.
Canopy's up a lot too.
Yep.
CGC. They're all rallying. They're all hot right now. But NBEV, I see the most opportunity on the daily chart versus the others.
Canopy, CGC.
Yeah, CGC's been popping off.
Yeah.
Oh wow. Yeah.
Hopefully that answers the question, though. I can elaborate on it more if you need. I can also post a chart in the stock community. I'll post a chart with my Fibonacci levels and my thoughts.
Yeah, please do. I'm the one manning these charts right now, and I I struggle. It's not my
I'll put
strength.
a chart in.
We're gonna turn the fundamental guy into a technical ninja.
Someone asked Nikki if you're long-term in Apple, how do you feel about leaps, which would be, for those who don't know, like long-term call options, like multi-year. Usually you would look out like 2 to 3 years. So they would be like January 2021s or January 2022s.
I actually don't trade options, so I don't mess with options.
There you go.
I don't know much about options, so I think you're more versed in that category?
Yeah, I played Leaps occasionally. Leaps will typically give you somewhere between like 2 and 4 times leverage to, like, if you're truly buying a like 2 to 3 year call option. Depending on what level you're aiming for, that's the range that I've typically evaluated. It's like we could pull up an option chain on Apple, and I'm guessing it's somewhere in that range too. But yeah, so like if you thought, for instance, that Apple's trading at 150 Apple's trading around 150, and you think it could be
300,
or north even of north of 250, then you could if you own the stock and it went from 150 to 300, you double your money. But if you had bought like 200 strike or 250 strike Leaps, or even maybe in the money Leaps, even if you bought like 150 strike Leaps, and the stock got to 300, you probably make like 4 to 5 times your money in the Leap. But again, the Leap is, because it's got leverage, it also has more downside. So if Apple goes nowhere and it's at 150 2 or 3 years from now, you probably lose 50 to 100% of the Leap value. And so that's the risk there, is like your leverage is going to magnify your gains and losses.
Options are my next big venture.
Yeah, options are interesting.
Yeah.
But and there's a lot of different strategies.
I hear nat gas is where it's at.
Yeah, nat gas options. It got a lot of people earlier this year, didn't they?
Yeah.
But leaps are interesting. Leaps are typically a little less dramatic in terms of playing options. Like a lot of people play these weekly options, or these earnings play options that are like short term, that expire within a week from now or a month from now, and those are so volatile. They can be up like 10 20x, or they wipe you out. They're down 100% if you're wrong about the timing and direction. So those are like extremely risky, and for most people, you don't want to ever mess with those. They're essentially gambling, or maybe even worse than gambling. But Leaps are always interesting, because they're actually like like I said, like a 2 to 3 year time frame on the option, and they do give you leverage. So they do magnify the gains, but they can also magnify the downside too. So only in certain situations would I play Leaps, particularly like if I felt like a stock was bottoming and the implied volatility on the Leap was relatively low, then I might be more interested in playing with the Leaps. But I mean, one other way to essentially to achieve the same thing as Leaps is to just either make your position size bigger, or even potentially use leverage. But again, that for most people, that's just not what you should do. So we'll have to get more into that topic. But
sweet.
I'll just hold it, take the dividends.
Yeah.
All right.
And at some point too, you could do some covered call strategies or things like that with a position like Apple, where, if it goes up 20 or 30%, but you're not ready to sell it, you could write call options against it and earn income and things like that. Those strategies are interesting. I play with those sometimes, but yeah.
Sounds good. Any other questions, guys? Just talking about like the overall market to kind of wrap this up. Let's see, the ES is up from Christmas about 15%. And we're now into prior support turned resistance. So, yeah, I mean, kind of going in line with the fundamentals this week, with so many earnings calls coming out, and, just some big macro data. Like I think this price level is going to be really important. Either a squeeze for a retest of all-time highs, or a rollover for an extension, which would take us into like more of a confirmed like bear market.
Yep. Yep, it will be an interesting week.
Cool. All right, guys. Nick, anything else?
Nope, that's it. I'll post that chart in the room here in just a second of NBEV.
All right. Trav, you got anything else?
No, that's it. Thanks for joining, everyone, and we'll see you in the channel.
All right. Take care, guys.